quoted that as well. So 2% higher after the 13% move up yesterday is where we're at. So 4,400. The low that it got yesterday was about 3,700. So 37 to 44 quickly. What do we have? First rates coming up in just a bit from now. And we'll look at the Nifty heat map, and then, of course, come down to individual stocks. So 25,870 is where the Nifty is at. 59,300 is where the Nifty Bank is at. And mid-cap index about a third higher. Small-cap index is up about 0.14%. And more up than down out of the gates. But it's just still very, very early and tentative as well as we kick off this Wednesday trading session. Nifty Bank now barely in the green. Nifty barely in the green. Mid-cap index a little bit more definitive with a 0.25% gain. The Nifty heat map, how many up and down as we begin today's session. I'll show you a quick snapshot view. So it's kind of more up than down. Grasim and Trent on one end and Bharti and L&T on the other end of the spectrum on the Nifty 50 heat map. 10 points now in the green on the Nifty. Surabhi.
Grasim is up because of that investment they're getting from BlackRock in their renewables arm. And the market's, taking a liking to that. So about a percent, actually less than a percent, 0.7% right now up. Hindalco also is up about 0.7%. So two strong moves from that group. M&M managing a little bit of gain. Trent is up about 0.5%. And then it really starts fizzling out. Nothing much to count here. Geo Financial less than 0.5% higher. Let's see where the pressure is coming in from. Interglobe Aviation down 1% for now. Let's see how the stock settles through the day. Down a little over 1%, 1.2% now. So Interglobe is in focus. Bharti Airtel has lost about 1%. JSW Steel is losing some ground. Titan is lower by about 0.5%. Otherwise, everything is flat. Bank Nifty is absolutely quiet. Large names like HDFC Bank not really providing any sense of direction. SBI totally flat. And ditto for ICICI Bank. So really nothing much is moving. Keep an eye out on Interglobe. Let's look at what Swiggy and Eternal are doing. Stocks are in news. Eternal is about 0.5% lower. And Swiggy, last I checked, was also trading fairly flat. Swiggy is not doing much. Just about 0.5% up. What a quiet start, Nigel.
Well, that's right. But a few stocks, they are bucking the trend in today's trading session. Silver seeing a bit of a melt up. We've been covering it. I recall middle of this year, when gold was up 40% and silver was up only 15%, we put out a case that probably silver could outperform from here on. That's the way it's played, because from there, silver's up close to around 80%, while gold has put on some weight, but not as much as silver, and that ratio as well has narrowed. So Hindustan Zinc, that's the only way to play it from the listed space. That one's up close to around 2.5%, and Vedanta, because of its holding in Hindustan Zinc, that gets some support as well, and that's why many are a little bit bullish on Vedanta, because it has the aluminium play, and it has the indirect play on silver, and those two commodities could continue to do well. So that explains why those stocks are up. The other few stocks that are doing well, AU Small Finance Bank, there's green out there. They have got the approval from the DFS, the Ministry of Finance, to increase the foreign investment limit in its shareholding. And remember, MSCI, FTSE, they as well track these changes. So that explains why that stock as well is up close to around 2% or thereabouts. JSW Energy, yesterday there was a large trade that got out of the way. GQG Partners sold close to around 1.5 crore shares. And once that's out of the way, you see the stock bounce up a little bit. And in addition to that, they have a board meeting on December 12th to consider fundraise via shares as well as warrants. So participation in that will be something that will be tracked as well. Saman Capital, that's up close to around 2%. I think earlier today or late last night, we have the CCC approval that's come in there from the IHC investment in Saman Capital. So that explains why that stock is seeing some green after, the kind of correction that we have seen on that name. And on the losing end, though, you have Grow, which is Billion Brains. That's down close to around 3.5%. Seeing some profit taking out there. And as would be mentioned already, Interglobe Aviation down 1.5%. The good news is the Nifty is now closer to around the 20 DMA. The bulls will like to see a close, gradually towards the 20 DMA, which is 100 points away from current levels.
Absolutely. And, silver Bs, right? 3% gain on silver Bs at this point. Hindustan Zinc, I think we mentioned 3% higher on Hindustan Zinc. 508 is where that is. Right next to each other, silver and Hindustan Zinc in terms of, a ticker, two names which are both up and about. Tube Investments, I think, is up about 3% as well as is the number one volume-led gainer right now. That'll come up as well. Yeah, 1.3 million shares. I mean, it comes up with 3% gains occasionally, but never on the top of the volume-led gainers list. But it's by far the number one volume-led gainers, gaining stock this morning coming through. What else? JSW Energy, some of the bunch of these silver ETFs are all up between 2, 3, 4%. So that's that. Car trade is up about 3% or so as well. 1,600 stocks are higher and about 700 stocks are lower at this point in time. Stuff on the downside. Capillaries, the recent listing is down about 2.5%. Latent View went up 10% yesterday. It's down about 1.5%. Eris was up 10% yesterday, down about 3.5%. So some reversal, some profit booking basically is what you have. Ixigo, for example, went up 10% yesterday. It's down about 2.5%. So these are all reversals. Newland was up 7% yesterday. It's down about 1.25%, 1.33%. But keep an eye out on some of these names because this is very, very initial first rates which are showing through. Aditya Suresh is Managing Director and Head of India Research, Macquarie Capital. Aditya, good morning. Good to have you here. Thanks for joining us. On paper, Aditya, if you can put it that way, right, across sell-side research houses, the view is turned. And most are expecting a better 2026. The reasons are well discussed and well documented. I sometimes wonder how much of that has got to do with the fact that, well, we've got sort of, we've spent enough time doing nothing and we've seen some price damage, and the fact that the year is turning. So maybe, hoping for a better year ahead, and how much of it is just based on fundamentals and valuations, etc. Because valuations across the board have still not come off. I mean, the premium compared to EMs, etc. has come off a little bit, and those kind of arguments one can make. But on an absolute basis across the board, valuations are not a screaming buy or anything. So how do you look at things, Aditya?
Prashant, thank you for having me on the show. If I just take you back a little bit, Prashant, so at least Macquarie, our view into this year was far more cautious than where the market view was at. And it was pinned on a few aspects, right? And it largely was on kind of where expectations were at for earnings, right? And across different sectors, one of the key points we were trying to make was that, we're going to see these cuts for us to kind of absorb and digest as a market. Now, through the year, we've kind of seen a lot of that kind of come in. In our recent piece, Prashant, now there is an element of looking out 1 year at a point in time. We kind of do these outlook reports. But the point we're trying to make is that when you kind of go back to the same framework, today where we are from an earnings perspective, I think there is an element of support here, right? Because the cuts already largely reflected in the numbers is our expectation. Or at least that's our sense. And to the extent that's correct, then we're really going to be coming off a phase where last year, for example, of fiscal 26, basically had no growth, right? Your revenue growth was about 5%, so GDP minus. Underneath that, you've seen some margin erosion. So PAT growth has been tracking below that 5%. In response, you've seen the cuts. But to the extent that now we're feeling more optimistic and comfortable with where expectations are at least the broader dynamic here is about us getting back towards that mid-teen pace of growth compared to it being absent, right? So you're trading at this high valuation and no growth. And when you then think about that versus kind of broader emerging markets, you had seen this phase where markets like Korea, Taiwan, all these things, estimates are being meaningfully revised upward, right? And so somewhat kind of counterintuitive perhaps, but you had this high PE multiples for India with no real kind of relative growth premium, which has been a fairly problematic dynamic for India as a market to kind of work through. And the point we're trying to make here is that we do feel that earnings coming back is going to then mean that foreigners also potentially come back to India as a market. That'll be a support factor here. But again, it's the entire theme about kind of this growth recovery. So I think things have changed, Prashant, in terms of what's in expectations. Feeling more comfortable about kind of what's in expectations for fiscal 27, fiscal 28, and that underpins a lot more of that positivity. Underneath that, in terms of stocks, it's very selective bottom up. There's no specific sector tilts necessarily.
No, well put, Aditya, and thanks for explaining that. No, I was just, no one wants another tough year. So sometimes at the end of the year, you're just, rooting for a better 2026. But well, There are reasons to do that as well, as you explain. And let's, I guess, get into some stocks, sectors, etc. Surabhi.
Yeah, absolutely. Aditya, hi, morning. I just wanted to go back to that earnings point before we talk sort of more specific names. You're saying, and that's an expectation we've had for several quarters, right? We start the year with expectations of 12-13% growth, and then those expectations are tapered down. So now, halfway down the year, what is your earnings projection for this year, and more importantly, FY27?
So I think fiscal 26 in itself, just this year, I think is less relevant from a forward-looking perspective for markets. I think just to establish the point, if we start there thinking about, say, fiscal 26, we're going to get some nominal GDP plus X kind of EPS growth. That's clearly not been the case, right? So even revenue growth in nominal terms has been below GDP, and underneath that, you've seen that margin erosion comment. So it's tracking at, say, maybe 2-3%, depending on kind of which index you're looking at and how you're adjusting for one-off items. Looking at fiscal 27, fiscal 28, when we do the bottom up and thinking about kind of what growth is, at least we're forecasting, we're in that, say, mid-teens kind of a pace of growth. We're not been in that kind of that trajectory for some time now. But you're correct that there is a bit of a departure in terms of the spot comment is one where growth is really, really anemic, and the expectation is that this recovers. But when you then do that across different sectors, take financials, for example, like our team in the financial side, they are speaking about credit growth in the high teens. Maybe you get some margin expansion as well. We'll see. That alone is, say, for example, 30% of MSCI India. The IT sector, at least our analysts are a bit more optimistic than where the street is at on revenues and margin. So when you're going to do that and go through across different sectors, we feel a bit more comfortable. And that is a meaningful departure from where our mindset was 12 months back.
So this mid-teens growth for next year, FY27, broadly speaking, if I were to ask you, what will lead it? Financials, like you mentioned. What else? I mean, just looking out next 12 to 14 months.
So it's just purely from an aggregate perspective. It's largely financials. Industrials is a big part of the story as well. Materials is part of the story. With the consumer names, it's more revenue and margin as well. There's this operating leverage comment, which is kind of embedded. Healthcare is a bit more idiosyncratic. Telecom is going to be some really good headline EPS growth still, because that sector, the kind of interest burden is still high. And so as this operating leverage kind of comment plays out, then you still see that growth coming through. But broadly speaking, we are feeling more comfortable in terms of what's in expectations right now.
Okay, all right. Hi, Aditya. Good to see you in, but short point being, going by all that you said, you're saying that 2026, we should be leaning more towards 30,000 rather than 20,000. I think that's the big takeaway, right?
Well, that was the one-line kind of catch-all kind of comment, but and that wasn't our mindset 12 months back, right? So we're far more kind of cautious. And just to kind of preface this a little bit more was that when you take this back to even Prashant's comments about valuations, the point about valuation still holds that in absolute terms or in relative terms, India as a market is still excessive when you look at it on its own. But the way we think about that valuation comment itself on, say, the next 12 months is that to the extent we are correct that foreigners are going to be coming back to India as a market, and to the extent that domestic liquidity is going to hold, it's almost as if then the only clearing function is then the IPO side, right? But overall, on balance, if those two aspects are kind of in our favor, then I think these multiples could further expand despite the high starting point.
Okay, all right. Let's get into a couple of sectors then. The EMS space, that's gone into a bit of a funk actually. It was the big theme, maybe getting into 2025. But this year it's had its share of problems for a couple of companies. You all believe that things are ripe, it has a longer runway, and things will improve from here on? If you could tell us what's your view?
Yeah, so our analyst who covers the EMS stocks, so he's still optimistic on the likes of, say, for example, Dixon, Avalon, these type of names. It is still coming back to that dynamic where, at least when you have this thematic which is at play, but I think the broader dynamic is that when you think about this as a combination of growth, returns, and free cash flow, all three dimensions are kind of working well for that sector at least in our bottom-up estimates for our analysts. And so that still keeps us optimistic on selective names.
Got that. I hope this is what you're saying is absolutely correct. You know, talking about the paper supply, right, which is coming through. Akash Prakash in an article yesterday wrote, well, that's one of his caveats. He also thinks it's going to be constructive, more constructive in 26 over 25, but with caveat that investors regulate themselves with regards to the supply, the paper supply which is coming in. And by the way, talking about paper supply, I think Meesho listing today, it's a big one. And I'm being told that there are some visuals coming in from the exchange. And we have the MD, CEO, the founder actually speaking at the Meesho listing. Maybe we'll play, show some shots and what's happening there. There's one more listing, Acres, which is also an interesting company in the defense aerospace arena, which also got subscribed pretty heavily. Just your own thoughts, Aditya. There are various ways to cut this, right? Equity issuance as a percentage of market cap, and you look at where this was in previous market phases, and where we are now. Some say, well, it's at a point where it can overwhelm the market. But of course, I mean, the fact is that one important cohort, which is FIs, are kind of missing out of the picture. So just your thoughts. Is it likely, if the supply stays so strong, that it could overwhelm markets?
I think just on the supply in itself, the one comment I'll make is that there is a bit of a red herring comment which I think we're missing, which is that a lot of the supply is coming in with the promoters, the PE, VC, predominantly cashing in, right, rather than being used to kind of being deployed towards growth capex. So that's a red herring comment, and obviously kind of all that is in response to these valuations which are available in the market, which are rich. So having said that, I think the broader dynamic is that to the extent that we have domestic liquidity holding at current levels, and to the extent foreigners did come back to the market, Prashant, as you kind of mentioning, and at least that's our expectation as well. Then India, which has been this roughly about $20 billion IPO market this year, last year, conditions would still support that. We'd much rather see the capital being deployed elsewhere and more towards constructive purposes on, say, capital formation. But having said that, yeah, I mean, so could you support $20 billion of activity in any given year, even next year? I think the liquidity supports that.
Liquidity supports that, and we'll see how this one plays out. By the way, do you have coverage on Indigo, Aditya?
So Macquarie, we don't cover Indigo, Prashant. We do cover the OTAs, so I can maybe speak in that lens, but Indigo is a stock which is not in our coverage.
What about the EMS space?
EMS, we just discussed it. That is an area which we covered by a different analyst on the team. We are optimistic on those names, despite the headlines which you've seen on one of the players in the past couple of days. We're still optimistic on the growth headroom which these companies have, margin expansion. So it's a mix, right? Growth, returns, and free cash flow, all above 20%, at least on those vectors, is our outlook.
Aditya, let's then round it up with a sector that you're really optimistic on, and that's financials. We briefly touched upon it earlier. But that's a very large universe. So leave us with a slightly narrower approach in what part of financials, lending, non-lending. And then these capital market plays are so interesting. They created a lot of wealth, but now they're probably among the most volatile parts of the market because of evolving regulations. So just tell us, what's your order of preference within financials?
So our analyst who covers financials is Raj. So he is still fairly selective in terms of his preferences. And so it's still more the large private banks. So that there's a bit of that, let's say, quality bias, safety bias, if I may, within that comment. So he's still more the private banks over the public sector banks. He's feeling still more constructive on your HDFC and ICICI Bank. Incrementally, a little bit more optimistic on maybe NBFCs and insurance as sectors. Capital markets, that's a gap in our coverage. So not really making a specific comment on that, but these are good operating leverage businesses, right? So you can see how the changes in kind of whether it be regulations or be just volatility on a daily basis does impact that sector quite a bit. But But rank sort, it's private banks, NBSE selectively, then the PSU banks, at least for our financials team.
Okay. All right, Aditya. We will leave it on that note for this morning. Thanks very much for joining in. Good to get that perspective. And wish you season's greetings and look forward to more conversations in 2026. Thank you for joining in. Well, with that, let's quickly check what's happening on the screen. And yeah, it's still flat, but the bias is a little positive now. So that's the good news. Nifty's managed about a 60-point gain, and we are at the morning highs. So let's see. Bulls trying to fight back 25,900 now. IRB Infra is working, very well. Last I checked, it was up 4-5%. We've got the toll collection data for the month gone by. Vivek, how does it look?
Well, that's right. So, the toll collection data, what's essentially transpired is that come year end, there's actually been a significant jump up as far as traffic growth is concerned. And what the company has told the exchanges last evening is that all three of the entities, which is IRB Infra, the public InvIT as well as the private InvIT, altogether have seen November toll collections at close to 716 crore, indicating that there's been a 16% jump on a year-on-year basis. Now, along with that, the management committee too is quite strong in terms of how they are expecting toll collections to go ahead. They're saying that the year-end holiday traffic boost and sustained nationwide economic activity are expected to further support growth in the coming months. Along with that, remember, IRB has taken pains to go ahead and explain to investors over the last few weeks that they are no longer just an EPC company. In fact, they will now exclusively focus on BOT bidding, which they believe should aid margins as well as the growth going forward. IRB on the back of that higher in the session today.
Okay, all right, got that. Thank you for that, Vivek. So IRB holding on to a gain of almost 3% now. Let's move on to our next guest then. And we're putting the spotlight on IKS Health. We have Nithya Balasubramaniam, whole-time director and CFO at IKS Health, joining in to take a couple of questions. And of course, we want to get some clarity on three key focal areas: the company's growth and expansion strategy for 2026, the partnership with the Google Cloud, and update on the integration and cross-selling to Acuity customers. Acuity is a company that they had acquired a few years ago. Nithya, good morning. Great to have you in. Thanks very much for joining in. So I'm going to start with the most interesting part of it all, and that is AI, right? And it seems that you folks are integrating agentic AI with your operations as well with this Google partnership. Tell us more. It's an exciting time. But in terms of, real operations, what it brings to the table, the costs of, doing this agentic AI integration vis-a-vis the returns, what are we looking at over the next couple of quarters?
Hi, good morning. So AI and investments in technology happens to be the most strategic vector for IKS. I think we have been very consistent in talking about this in our earnings calls as well. In fact, if you look at our technology spend, it's inched up quite significantly, now touching about 5% of revenues. And I actually foresee this continuing to grow meaningfully as well. If you look at our AI investments, there are multiple use cases some of them are live and some of them are, of course, still in the lab. I'll talk about a few that we are most excited about. In autonomous coding, for instance, there are two use cases in two specialties that are already live, and we are now trying to expand that to other specialties as well. In terms of prior authorization, or what we call patient financial clearance, where you need certain permissions from the insurer before you can even see a doctor or be prescribed a certain treatment. Again, we have pushed several AI use cases and achieved very high levels of automation. And the last but not the least is the agentic AI platform that we have launched on Google Cloud, which is actually able to connect automated workflows across tasks. The reason this is unique and important is because when you're able to connect these workflows, your ability to maximize for what the customer wants, which is to be able to get the right revenue for the right care that's delivered and to minimize costs, is much higher than if you're addressing individual tasks.
Sure.
So yes, we're very excited about this.
Sure. So you said that your current spends on technology are at about 5%. And they're likely to go higher. Give us some sense of, how that scale up is going to be and how that starts and by when it starts feeding into margin. I mean, you did really well on margins, even in the quarter gone by. You're at about, 31% ballpark now. So as some of these AI efforts mature, how is the margin profile going to improve? I mean, we're just trying to understand cost benefit analysis here. Some projections will help.
So I won't be able to give you future projections, but what I can tell you is what we have delivered in the past, right? So if you go back and look at legacy IKS financials, you'll realize that from the FY20 through FY24 timeframe, when my revenues grew 25% CAGR, my employee cost in the same timeframe grew only 8%. And the non-linearity is entirely due to the technology investments and the automation that we were able to deploy in the various features. So with AI, of course, we're hoping to see similar kind of leverage, but that'll happen as we put these products out in the market.
And the tech spends go up by how much from the current 5%?
So it'll anyway grow right alongside revenue. I don't see this percentage of revenue coming down. We might even step it up depending on some of the new features, etc., that we're working on the platform.
Okay. So let's talk about how the overall business is shaping up. We had a brokerage report out a couple of days back on the company, and that note sounds very, very optimistic. I mean, just to quote, this is Nomura. Nomura is saying that at a CAGR level, you can probably do 16% revenue and a 32% EPS CAGR going up to FY28. Do these sound like fair calculations and fair assumptions to you?
I really cannot speak to what is there in the analyst report, but I'll tell you what we are guiding the street, which is that one, we do want to be able to grow several notches higher than the market growth itself. The outsourcing market growth in our space is expanding at about 12%. So yeah, several notches higher than that. And in terms of EBITDA margins, our guidance has been that the early to mid 30s level is what is sustainable for us. We're already touching those levels, and we're comfortable saying that in the near to midterm, we should be able to maintain these margins. When it comes to PAT or earnings growth, yes, it should grow faster than EBITDA because we do see significant cash generation and therefore our ability to get to zero net debt level in FY27 itself. So you'll see that impact in earnings.
And we'll ask you that one question that we always ask, but then, you can imagine why we ask it, because there's just so much of rhetoric coming out of the US almost on a daily basis, right? It's one day it's H-1B visas, the other day it's Indian rice. And I mean, you are heavily dependent on, of course, US customers. So all is well or anything, I mean, anything that you need to tweak or strategically change in terms of how you're servicing these customers as we enter the new year, given the current White House dispensation?
It is fair that a lot keeps happening and a lot makes the news as well. But I think so far, if you look at what specifics that they've talked about, so H-1B visas, for instance, has zero impact on us because that's not a business model. Whatever talent we need in the US, we actually hire in that geography. Right? So H-1B visas do not have an impact. I think at some point of time, they were talking about a potential act where they might increase tax for firms that are outsourcing.
Yes.
And again, that again did not see any support. So no impact. But broadly, I think what they're trying to do is reduce healthcare spends. Right? If you look at the US, they're spending almost about 20% of GDP, and they really need to do something to bend the cost curve. So they have come up with measures to reduce Medicaid spending by quite a significant amount. Again, for us as a business model, our customers are not exposed to Medicaid. It's more Medicare and commercial payers. And therefore, that impact is rather insignificant. But that being said, given these broader headwinds, it's if anything, it's maybe a little easier for us to convince our customers that, hey, we are part of the solution. Here's one way for you to actually shore up your P&L in light of all the headwinds that are playing out.
Yeah. Nithya, morning, Prashant here. Sorry, I just very briefly, this entire AI bit, right, can it become like a competitor internally for you? It helps in efficiency, etc. But could it cut down per customer billing rate?
So I don't see that happening in the near to midterm. If you look at how we have always priced our product and services, it's always been based on the outcomes that we want to deliver to the customer.
But the customer on the other side, if they realize that you're getting a lot more done with a lot less, they're going to want that, right? They're going to want that savings across.
We're not having those conversations, Prashant, so far. I think while AI is the pace of change is quite healthy, we've always been deploying tech, right? You go back and look at my 18, 19-year history, we've always been deploying tech, whether it be machine learning, robotic process automation, and the model and the way that we actually deliver our services and the way we price our services, we have been able to take leverage of that.
Okay.
That tech deployment onto our P&L. Of course, it's very difficult to predict what will happen 5 years from now, 7 years from now. But I think in the near term, based on the conversations that we're having, for a large part, we should be able to take benefit of technology. In some cases, yes, I think it remains to be seen. Over a period of time, we'll see how this sector matures and shapes up. Maybe there are some parts of efficiencies of technology that we have to pass along. We're not there yet, but again, we're not shying away from that either.
Okay, got that. So evolving situation, but at this stage, at least, as we speak today, you're not foreseeing that happening in a big way in terms of per customer billing rates getting impacted because of all this deployment. Thank you very much for joining us, Nithya. Appreciate you coming on here on CNBC-TV18. We come back on the other side. Anupam Rasayan Management has signed a definitive agreement to acquire a US-based specialty chemicals company. We have Gopal Agarwal from the company joining us on the other side.
"26 years of CNBC TV18.
Co-presented by Bank of Maharashtra, Ek Parivar, Ek Bank. Co-powered by National Stock Exchange, Soch Kar, Samajh Kar, Invest Kar. And Century Ply Club Prime, Raho Befikar.
We have carefully reviewed your performance and promoting you to branch manager.
Sir. Hello. Motilal Oswal.
When life goes to the next level, download Rise by Motilal Oswal. Investments and securities market are subject to market risks. Read all the related documents carefully before investing.
अपनी लाडली की सेफ्टी से समझौता? नो चांस। इसीलिए पॉलीकैप ग्रीन वायर्स। इसमें है 99.97% हाई कंडक्टिव प्योर कॉपर। ये साधारण वायर्स के मुकाबले जल्दी गर्म नहीं होते। पॉलीकैप ग्रीन वायर्स, इंडिया सेफ हैप्पी कनेक्शन।
Hey, why are so many lights on? Is it Navroz?
Settling accounts, uncle?
No, writing a love letter. Check your accounts every day and ensure there is no mismatch. Exchange sends trade-related messages daily. Do timely verification. And if there is a mismatch, inform the exchange immediately.
Soch kar, samajh kar, invest kar.
This is Network 18, and you're watching CNBC TV18.
Presented by Punjab National Bank, the name you can bank upon. Co-powered by SBI, best hai sabko pata hai. In association with Servo Hypersport F5, when speed is your default.
26 years of CNBC TV18.
It's a green-looking screen. The Nifty is holding higher. The number of stocks advancing are much more than the number of stocks declining. The ratio right now is 4:1. Haven't seen that sort of a ratio in many, many trading sessions. Let's hope it holds. Well, let's focus on Anupam Rasayan. The company is in focus as they've signed a definitive agreement for acquisition of 100% equity for around $150 million in US-based Jayhawk Fine Chemicals. To discuss this, what's the way ahead, what are the benefits of this particular deal, Mr. Gopal Agarwal, the CEO of Anupam Rasayan, joins in. Hi, Mr. Agarwal. Good morning. Good to see you, Ben. And thanks a lot for joining in, and congratulations on this large deal. Well, before we come to you, Mr. Agarwal, just want to focus on, what we're going to be talking about, the synergies from this acquisition, what will the combined entity look like, and are there any cross-selling opportunities as well? But Mr. Agarwal, let's get off the blocks with the first point then. Explain to us the deal structure. You're investing, I think, close to around $40 million via a wholly owned subsidiary. The rest of it is coming from the investment company, right? Because you're subscribing to the Class B shares. What are the commitments you have made to the investment company? If you could give us some color in terms of dividends, any outgo, IRR targets as well.
Well, first of all, thank you, Nigel, for having us, on the channel. It's one of the, I would say, big milestone, in Anupam's history. It's a pretty bit transformative kind of a journey, for us, to become a global specialty chemical company. And hence, it's a pleasure to be, on your channel for this. See, as far as the structure is concerned, let me kind of clarify. In all, as far as the enterprise value is concerned, it's 134 million. Plus, the company has 16 million of cash, so which would mean that we will end up paying 150 million, for the transaction. Of this, currently, we have multiple options. One of the options which is under consideration is wherein, the company will look at investing roughly, let's say, 40 million, out of Anupam. And then we will look at maybe, let's say, anywhere between 100 and 110 crore coming from a large, very large global financial institution, which has a AUM of over $100 billion. Idea would be that, we use this money, to kind of acquire the company, and maybe at appropriate stage, look at some kind of a capital raise or otherwise to kind of fund this back. So this is how we are looking to kind of fund the transaction. This would ensure that we get 100% control over the company, because the investment which will come from the global institution would not have any voting rights. So this will allow us 100% control and consolidation of the company.
Okay, and the investment company would be?
Currently, it's under discussion. As I said, we have multiple options, and this is just one of the offer which has come to us. So maybe at the appropriate time, we will share the details of the same with you, Nigel.
Okay, all right. So we'll have to wait by in terms of, how things shape up on that front. Give us a few more details. How much of this funding will be via debt? And I believe you're saying that there will be margin improvement. But the acquired entities' margins actually are relatively low in comparison to what you're doing right now. So give us some color on that front, debt and margin outlook.
So as I said, currently, we are looking to raise roughly around 40 million. Rest would be through a quasi-equity structure, which will come from the global investor, which we are talking about. As far as the margins are concerned, let me share a bit of a kind of a background, on this. For us, this is something which is clearly a step towards nearshoring, which is one of the key thematic, which most of our customers have been looking for. It allows us basically to access some of the, I would say, niche chemistries, including oxidation, Suzuki, Exo, and others, which currently, Anupam does not have. And, there are certain chemistry which, let's say, are the expertise of Anupam. So that way, it's a big complementary in terms of chemistry. Similarly, if you look in terms of segment, Anupam has large agro presence, which is roughly around 55-60%. Performance material, which is a big kind of a segment which we have been looking to, let's say, foray into, currently is only 10 or 12% for us. While as Jayhawk, the entity which we are acquiring, almost 70% of their revenue is from performance material. And this goes into niche segment like aviation, semicon, electricals, which are a very, I would say, kind of a growing segment. As far as the customers are concerned, again, there are some common customers, and we'll also get access to a lot more, I would say, large global customer, which will help us kind of expand both, I would say, cross-selling, as well as, help us probably be a lot more efficient, in terms of having that synergy benefit, which will allow us to kind of expand the margin, from the current levels.
Okay. Gopal, hi, morning. Congratulations, Prashant here. Two questions. Does it have, in the chemistries and what it produces, this company produces, does it have like a dominant market share in any niche segment?
No, Prashant. So basically, as I said, as far as the high purity process or chemistry is concerned, this company Jayhawk has I would say, a kind of a monopoly position, and have customers who have been there with them for decades. I would say it's a kind of a annuity, business which they have been able to build, given the expertise of the chemistry, and some of the processes which I would say are unique, to this company, which has been developed over a period of time by the team.
High value performance materials. I think it's about 12% of your revenues currently, right? Post this acquisition, what will that number be at, and what are margins in this segment as opposed to the rest of the business?
So, to answer the first question, I think post the acquisition, roughly, the combined entity will look like we will have roughly 40-45% coming from agro, almost 35% would be performance material, and a balance would be personal care and pharma for us. As you rightly mentioned, see, performance chemicals is one of the fastest growing segment, and given the end application, which is in aviation and semicon, which is again are a hugely growing sector, the margins are going to expand. And the way we are looking at it is not to be a what you call competitive supplier, but more look at providing a integrated supply chain solutions to our customer, which will help us expand the overall margin. So what we are talking about is a combination of onshore and nearshore, which will ensure that the margins going forward will only increase.
What are the margins now, Gopal, on this segment as opposed to the rest of the business?
So I would say roughly it's around 20%. But yes, as I said, given the synergy and integration benefit, we do believe I think we should be able to kind of achieve or come closer to the margin which Anupam enjoys, which is roughly around let's say 25% in the near term.
Okay, and over what period? Because that was one of the concerns that your margins, Anupam, is closer to 28%, and this entity that you're acquiring is closer to, like you said, 19-20%. Over what time period will the blended margins stabilize of the consolidated entity? Over what period will they come up to 25%?
I may not be able to kind of tell you the specific, let's say in terms of the years, but I think it would be, I would say in the near term, because so we have plans of kind of expanding our portfolio, at Jayhawk. In fact, just to share with you, the current plant has almost 3 million, square meters of land. Currently, only 20% of that, I would say 15-20% of that is used. And in fact, that has been one of the biggest driver for us as well, because it allows us to expand our product offering, to the customers, from there, and we can really look at expanding, I would say both the product offering as well as services to our customer, which will ensure that, we are able to kind of grow to the margin which currently, let's say, Anupam enjoys much faster than...
Sure. And you also mentioned that this performance chemicals is a high growth segment. So again, sustained just growth, I'm now talking top line growth for this segment, which is going to be almost 35% of your operations. What will that be going forward? So, I mean, I'm trying to understand the advantage at the headline, the revenue level for the blended entity. What should be a sustained, revenue growth, which one can expect immediately first year onwards after integration?
So as I said, I may not be able to guide you as far as the company is concerned, but if I was to talk about the market, the segment which are aviation, electricals and semicon are something which are growing at a pace of almost, I would say, anywhere between 20 to 30%. And our endeavor has always been, to kind of grow bigger than or larger than, what the market is growing. So from that perspective, as I said, this is something which is going to be a big growth driver for Anupam, and I would say Anupam and Jayhawk as an entity together.
But you'll have to increase debt. Like you mentioned, that the funding is happening, partly by equity and partly by quasi-debt. So while you go for growth and complementary, business verticals, overall, how much will the debt go up by? I'm now talking consolidated debt. Where is it right now for Anupam? And over the course of the next 1 year, say, how much will it go up by?
So two things. One, even at Anupam level, Surabhi, currently there is practically no term debt, number one. Number two, as I said, the entity which we are acquiring, is sitting with a 16 million of cash already, as a part of the deal itself. So yes, in terms of specifics, we will be sitting with the management and, kind of come back with the exact capex plan and all that. But I can assure you, it is not something which is going to be a big number, both in terms of capex and debt, which we are looking at it. Because I said a lot of it, will be driven just by the synergies, which both the companies will be able to kind of work together and provide. Also, let me add, another driver for us, in this deal was the management. And please appreciate in any CDMO business, people are the biggest asset. You have Jayhawk, which has been, entity which has been running by the existing management, I would say for almost last over 2 decades. So we have a team of experienced people who have, I would say, more than requisite knowledge of the chemistries and relationship with the customer, which will ensure that, yes, all we need to do is be the catalyst, to them. And growth is something which is, I would say, is something which will be our way much sooner than otherwise.
All right, we've got Gopal. We'll leave it there. Thank you very much for joining us. Really appreciate your time here on CNBC-TV18. Well, you got two big listings on your screen. One, of course, much bigger than the other, but both interesting. Meesho is starting in the pre-open 45% higher. I think we've got market regular trading on both with the bell ringing and just about now. There you go. What do we have? First rates should start to appear on both in just a bit. There you go. 166, 167 on Meesho. That's a 50% jump on top of what they sold the IPO at. And on Acres, we still are awaiting rates. So we will just look at that.
About 16% up for Acres as well. So even that is a good listing.
Yeah.
143 on Acres, but Meesho really takes the cake, steals the thunder. And that's the one thing that I think investors really liked. The issue was oversubscribed almost 80 times across categories. I think everyone said that they left a fair bit on the table. The pricing was not too aggressive. And maybe that's what they're getting rewarded for now.
Absolutely. And I think it's a phenomenal debut for Meesho. Really, the year of so many consumer tech companies coming to the market. Some not so much consumer tech, but basically new age businesses which really build scale, size. So you've got both coming to the market. By the way, even Acres, in that sense, is new age because it's building for a sector which is where there's not too much manufacturing capacity. I'm talking about manufacturing for the aerospace industry. Although it's, of course, compared to Meesho, much smaller issue. I mean, in that sense. But good day in terms of market opening. I think there is one more listing, but much smaller, and maybe we can go across to that a little later. But that's the debut which is coming through on Meesho and Acres. Vinay Rajani is with us with a quick check on markets and where things are at. 50 points higher, by the way, 25,885. Vinay, how would you look at things? What are the trades?
Good morning. So there was a rebound from the lower level yesterday. 50 days EMA was the support, and exactly from that level we have seen a nice rebound in the Nifty. However, still Nifty is placed below 5, 10 and 20 days EMA. So there are a cluster of resistances looming around 25,950 to 26,000. So still there is an uncertainty as far as Nifty is concerned. But yes, there was a good rebound in the mid cap, small cap segment after a healthy corrections from the recent highs. So yes, breadth has improved a bit. We need to see whether we are able to cross the important resistance in the coming days or not. So it is very important that Nifty should close above 26,000 to confirm the resumption of an uptrend. Unless that happens, stock specific movement will be there and choppiness would be there in the Nifty. So yesterday's low, we are asking our traders to keep a stop loss. 25,700 odd level should be the stop loss in long position. On the higher side, we are waiting for 26,000 to be taken out. Once that is taken out, definitely we can expect good movement on the upside in the Nifty. So yes, right now consolidation is going on with strict stop losses. One can remain stock specific bullish.
Okay, all right. Let's get to your stock specific calls then.
Yeah, so few large cap stocks are still looking strong and sectors are also performing. So one of the sector which we like is the auto sector. So from the auto space, Eicher Motor looks very strong on the chart. So around 7,200 one can go long. I would suggest a stop loss is 7,100. On the upside, I'm expecting a short-term target at 7,350. Second stock is from the NBFC space, the Chola Finance. So Chola Finance has been a resilient stock and this entire space has been performing well. So NBFC Chola Finance is looking quite strong, and 1750 is the entry level around which one can go long. 1720 should be the trading stop loss. On the higher side, I'm expecting a target of 1,800.
Okay, all right, got it. Thank you very much for that, Vinay. We'll take a very quick break on that note, come up on the other side with Manisha Gupta and the latest commodity cues.
"26 years of CNBC TV18.
Fly Emirates, fly better.
सपना था कि खुद का ट्रांसपोर्ट बिजनेस हो और फंडिंग मिलना इतना आसान नहीं था।
मशीनें तो खरीद ली थी, पर बड़ा ऑर्डर लेने के लिए पूंजी की जरूरत थी। घर से ही केक बनाने का काम शुरू किया था मैंने।
किसी के यहाँ टेबल कुर्सी बनाते बनाते मुझे ये हौसला मिला कि मुझे खुद का काम शुरू करना चाहिए।
फिर इनका साथ मिला और नए रास्ते खुल गए।
फिर इनका साथ मिला और मेरा बिजनेस इतना बड़ा हो गया। फिर इनका साथ मिला और फैक्ट्री यहाँ तक पहुँच गई।
फिर इनका साथ मिला और मैं इस मुकाम पर पहुँच गया।
सुन रहे हैं ना, ये सब एक ही नाम की बात कर रहे हैं और वो नाम है पीएनबी। आपका सपना सिर्फ आपका नहीं होता है, वो पूरे देश की तरक्की का हिस्सा होता है। इसीलिए पीएनबी लेकर आया है एमएसएमई लोन स्कीम्स जो छोटे छोटे बिजनेसेस को आगे बढ़ाने के लिए बनाई गई है। इजी डॉक्यूमेंटेशन और अट्रैक्टिव रेट ऑफ इंटरेस्ट पे लोन आपको देता है पीएनबी, वो भी बिना किसी झंझट। जट से पीएनबी का भरोसा, अब हर व्यापार होगा बड़ा।
पैसा लगाना है तो सेंचुरी क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड में मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी क्लब प्राइम, रहो बेफिक्र।
IMTF rates hurting your profits?
Why, what's your MTF interest rate?
Mine is 14.5%. It's cutting down my returns.
Then switch to Paytm Money. Their MTF interest rate is just 7.99% per annum.
Pay less and trade more. Switch to Paytm Money.
Investments in the securities market are subject to market risk. Read all the related documents carefully before investing.
माँ के पैरों की धूल माथे पर लगाओ, परदेश की गलियों में अपने वतन की गीत सुनाओ।
कौन है जो जोड़े देश को? विकसित भारत का विकसित वायर।
आपका और हमारा बहुत ही लंबा और करीबी रिश्ता है। हम उस चटकारे में हैं जो आप अपने दोस्तों के साथ लेते हैं, उस दराज में है जिसमें छिपा है माँ के राजमा चावल का राज। कभी आपके हाथ में अच्छाई की चमक बनकर आपका दिल जीतते रहे। तो अगली बार आपको कोई चीज पसंद आ जाए तो उसे पलट के देखिएगा, जरूर हमारा नाम दिख जाएगा।
ऑप्शन ट्रेडिंग की सोच रहा हूँ। सोचना भी मत, बड़ा पैसा चाहिए, बेचनी पड़ेगी कार, बिक जाएगा घर बार। डर गया, पर ऐसा कुछ होता नहीं।
शेयर इंडिया के साथ इजीली गवर्नमेंट सिक्योरिटीज, इक्विटीज और म्यूचुअल फंड्स के पोर्टफोलियो को प्लेज कर सकते हैं और इस मार्जिन मनी से बेफिक्र ट्रेड कर सकते हैं। शेयर इंडिया, डाउनलोड द ऐप नाउ।
Investments in securities markets are subject to market risks. Read all related documents carefully before investing.
26 years of CNBC-TV18.
Welcome back. So the equity market has picked up some momentum, green on the screen. Let's figure out what is happening with the commodities. With commodities, as usually the gold or silver on the screen. Manisha, what's the latest?
Well, I'm talking about all the record highs that we've seen within commodities in this year, and that is silver, gold and copper in that ranking there, with the kind of returns that you've seen in 2025 coming in from all of these. So that is what we've done, especially in case of silver. 4% of gains in the overnight markets. We are up by 19% for the last 1 month. And in this year until now, it's 111% in dollar terms. It is 120% when you look at silver in Indian rupees, counting in the rupee depreciation as well. Well, when it comes to silver, it is about silver being a dollar index, which is down 8.5% in this year. That clearly has been a supportive factor. And then silver added in the US Geological Survey list of critical minerals clearly has had silver surging on the higher side. The market focus also is on the Section 232, which is being worked on right now, with the expectation that you could see a result of this coming in next 4 to 6 weeks. And if this comes in positive, then you could be looking at silver surging even higher from here on. And then silver being considered for an inclusion due to import independence there. Also, when you look at the physical buying, that has been very strong in the Indian markets. When you look at the global silver ETF inflows, that has been on the higher side as well. So last month was 487 tons of silver ETFs being bought in the global markets. this month till time, it already is 475 tons. So that tells you that people are not leaving it out. And at these current levels as well, there are investors when it comes to silver. The central bank acquisitions, the industrial demand, whether it's for data centers or solar panels, also has been supportive. And then the supply deficit is expected to continue in 2026 as a sixth straight year has been supportive for silver. And markets are pretty bullish going forward for silver as well. We have $65 and $75 an ounce of forecast coming in for the next year. Gold prices then, and we are trading above $4,200 an ounce for this one as well. 43.80 is an all-time high, and gold has been holding around those levels for some time now. Gold actually has hit 45 times record highs in 2025 till time. Gold also has seen a 60% of gain in this year till time. China has added gold to its official reserves for a 13th straight month in the month of November. ETF inflows, robust physical demand, all of that has been supportive for this as well. But what is the next gold is copper, because we've seen all-time highs overnight into this one. Copper has hit an all-time high of $11,770 a ton. For the US markets, we saw an all-time high in the month of August therein. Prices are up by 34% in this year till time. Copper stockpile in the US is something that has been supportive. And apart from that, it is China saying that the domestic growth is what they are going to be prioritizing in 2026. It also has to do with strong demand coming in from power upgrades, also from computing power, from EVs, that will keep the copper prices supported there. And then it is about the Sensex Securities, which says that copper prices, once they come to $12,000 a ton in next year, that is when you will see new investments coming in for mining. Citi, I was talking to them yesterday. Max Layton told me that $13,000 a ton is what their best case scenario is in the next year. So from these current levels as well, 10 to 15% of gains in copper is what they're working with in the next 3 to 6 weeks.
Okay, all right. Thank you for that, Manisha. We'll take a quick break on that note, come up on the other side. And Lata will be in conversation with Enam Holdings, Sridhar Sivaraman, on the impact of lower nominal GDP on earnings and what stocks may shine in 2026.
"26 years of CNBC-TV18.
You want to talk business? Meet me in the onboard lounge.
We have carefully reviewed your performance and promoting you to branch manager.
Sir. Hello, Motilal Oswal.
When life goes to the next level, download Rise by Motilal Oswal. Investments and securities market are subject to market risks. Read all the related documents carefully before investing.
Park Medi World Limited proposes an initial public offering of its equity shares. The 100% book-built offer is being offered at a price band of rupees 154 to rupees 162 per equity share of face value of rupees 2 each. Bid offer opens on Wednesday, December 10th, 2025. Bid offer closes on Friday, December 12, 2025. For risk involved and other details, please refer to the red herring prospectus, which is available on the website of the company, the SEBI, the BRLMs, and the stock exchanges.
माँ के पैरों की धूल माथे पर लगाऊं, चांद तारों को भी हासिल कर लूं, फिर घर आना चाहूं।
होम EMI 50,000।
तो जा रही है। आपकी क्या तैयारी है?
पूरे सीलिंग का 20,000।
आउटगोइंग है जा रही। आपकी क्या तैयारी?
मौसा जी, मेरी शादी का गिफ्ट।
मनी की आउटगोइंग रहेगी जारी, इसीलिए कर लो तैयारी। SIP के साथ इन्वेस्ट करो और जरूरत पड़ने पर SWP के साथ सिस्टमैटिकली विड्रॉ करो। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेजों को ध्यान से पढ़ें।
मुबारक हो सर, आपका रिटायरमेंट प्लान रेडी है।
थैंक यू।
जिम्मेदारियां हमसे बांटी, हल्का लगेगा। इंडिया फर्स्ट के लाइफ इंश्योरेंस प्लान्स।
The best holiday ever's finally over.
When you fly Emirates, your holiday isn't over until your flight is over.
शुक्ला
हाँ जी बंद है।
सुनो
शुक्ला जी,
अरे कल आना, आज बैंक बंद है।
बैंक?
जब से दुकान खोली है मैंने तब से बैंक का ही तो काम कर रहा हूँ। अरे डिपॉजिट करो तो फॉर्म भरो, विड्रॉल करो तो फॉर्म भरो और ऊपर से उसके लिए एक्स्ट्रा चार्जेस भी दो। क्यूआर, कार्ड पेमेंट, बैंक ट्रांसफर, सबका हिसाब किताब तो मुझी को रखना पड़ता है ना। तो मैं तो बन गया ना चपरासी।
नॉट बैंकिंग विद AU?
AU करंट अकाउंट के साथ मिलता है फ्री UPI QR ओवरड्राफ्ट फैसिलिटी और एक ही ऐप से बैंक के सारे काम।
मतलब फटाक से AU।
हाँ जी शुक्ला जी, सोच बदलो और बैंक भी।
26 years of CNBC-TV18.
Welcome to Market Masters. The underperformance of Indian equities has been emphatic this year. In a year-over-year calculation, the MSCI India index is actually down over 3%, nearly 4% actually, while North Asia, that is China, Korea and Taiwan, have given outsized gains between 100 and, over 100%. But India has done far better if one looks at a 5 or a 10-year trajectory. So is it time for mean reversal in 2026? Or will India's slower nominal GDP growth keep earnings lower? And of course, will gold continue to be a good investment? For these and many other views on the market, I have with me Sridhar Shivram of Enam. Thank you very much, Sridhar.
Thanks for inviting me, Lata.
It's always a pleasure having you with us. Okay, that time for mean reversal, that is a very big question we are all asking ourselves.
Yeah.
What's your sense? Do you think earnings are returning?
Yeah. So I think, Lata, last 6 quarters have been single-digit earnings growth. And I think the main reason for India's underperformance, you can give 100 reasons why India has underperformed, but if you ask me, the main and the structural reason is India has had very poor earnings growth in the last 6 quarters. And if you look at the performance of India over the last 6 quarters, roughly matches an underperformance because of single-digit earnings growth. So for me, that is the most important reason. Rest you can say, oh, we don't have AI plays, we don't have this, we don't have commodity, or we don't have something else. But I think if earnings comes back, everything will fall into place. Our own view is that next year, which is FY27, we'll get at least 15 to 18% earnings growth. And as a result, we will see the market come back sometime from, say, early next year, sometime, maybe Jan, Feb. We don't know when the market turns, because by then you will start getting early signs of the Q3 results, which we think will be better than Q2. And I think that should be the start. As we saw from the data that, markets have cycles, and India has done very well. If you take 10-year performance, there are just 3 or 4 large markets which have given you, closer to 10% return, and India is one of them.
And these are dollar returns.
And these are dollar returns, exactly. Our currency has depreciated significantly over this period. And so I think there are cycles when, markets underperform. This is one of those. We can't have
year after year.
Every year having, strong positive returns. That's how markets are. And I think it's part of the game. So you have to understand when valuations are high, try to be cautious, and you need to know, when to go
when to step in and what.
Yeah, this looks like a time to, step in. I mean, we've been cautious for almost 9 months.
Let me take you up on that.
Sure.
Step in. Where would you step in? Is it financials? Is it IT, which has got beaten down a lot and perhaps a little misunderstood? Or is it e-commerce, where they're promising this?
So, Lata, you briefly spoke about nominal GDP. We actually think that nominal GDP also has been one of the reasons for poor earnings.
Okay, then let me postpone my sectoral question and come to...
So, I'll combine both. So our own view is that both government and Reserve Bank have pivoted. They have understood that the low nominal GDP is a problem for the government, also for the corporates. As a result, also a problem for tax collection. So if you see the GST cut, we think is a move from the government to boost consumption. And once you have stronger consumption, the constant, complain about low capex by private sector. When we speak to private sector, their point is if there is demand, we'll put capex. If there is no demand, you can't be expecting us to put capex just for the sake of it. We think this is a chicken and egg story. The government has taken the first step. They have taken multiple steps, by the way. Also, if I see what Reserve Bank has done in terms of cutting rates, also, if I add to that, their liberal view on getting capital into the financial sector is all, in my view, a concerted effort by the government and Reserve Bank to get growth back. I mean, let's accept it, the real GDP number doesn't feel on the ground. The nominal GDP actually tells you a story. So I think that is the basis. So if I flip from there to what should be in the market, financials do look good because we think we are in the late stage of the rate cut cycle, but we think it will be lower for longer. I am not in the camp who thinks that we are going to get rate hike in, say, 9 months or a year. We could see sustained low, below 4% inflation for, say, another 9 months or even a year. So lower rates will help more,
will help
growth.
Margins of banks,
exactly.
For sure.
So, and NBFCs. So we like financials as a space. We think NBFCs do very well when the rate cycle is low. Banks should do well, ignoring one more quarter of, some issues because of the rate cut. They should do well. This is a space which looks well. Consumption is the other space which looks well. Discretionary consumption, higher end. We think still there is issue with rural consumption. A low food price effectively means that the farmer is not...
A part of the rural India is affected.
So there is a part of rural India which still hurts. But we think that the...
So it will be more autos.
So it could be autos, it could be higher end discretionary consumption. Yeah, it could be any of those, travel, tourism,
hotels.
All of that, hotels. So there is a whole host which you can take from there. The rest is actually very bottom up. We do like pharmaceuticals because there are a lot of stories emerging from there. It's a lot of bottom up stories emerging.
What about the e-commerce guys? I mean, Swiggy is raising money right away. And you have Eternal, you have enough... Nykaa, you have other kinds of e-commerce plays.
So my personal view is some of them are looking interesting because of the correction in the value. Some of them look still very expensive. So it's a mixed bag. So you can't paint that all e-commerce looks good. Some of them still look very expensive. But that is a space where there is growth. Whether it is profitable growth, time will tell. But there is very strong growth and there's competition also emerging. So as an investor, you have to be very nuanced in that as to whether you want to participate or not. Wherever we don't see value, we just stay away.
Okay. Speaking of value, we are in the season of IPOs. In fact, yesterday we had Ashish Gupta of Axis AMC strongly arguing that, we all are getting carried away by the FPI angle to shares being depressed. Shares are depressed because the supply is huge from IPOs. What is your word on that sector? Do you like any of the plays?
Yeah, so I think we broadly skipped most IPOs. One, because the valuations are very high. And what we've also seen is that growth promised by many of the companies coming to IPOs haven't actually materialized. The other thing is one of the mutual fund heads mentioned to me that incrementally the mutual fund inflows are lesser than the supply. So if they have to then participate in a supply, which is an IPO...
They have to sell something else.
Yeah, they have to sell something. Whereas in the earlier days, the supply was so much higher, the inflow was so much higher that they always had the problem, which is that you're carrying to build more cash. Yep. So I think that's a tipping point where the mutual funds then have to figure out whether you want to participate in an IPO by selling some existing stock or not. So I think supply is an issue. Hopefully, as newer IPOs start to underperform, we will see that, sanity will prevail in the market.
Yeah, and the issuers taper off.
Exactly. That's what.
It's not just that they're coming at fabulous prices, they're also coming in droves. Yes. And then the lock-in will end and that supply comes. Okay, a question that before I lose time, gold.
Yes.
You know, it's given. I always thank you for opening my eyes to the sovereign bonds. I did not even think of them. Now they are phased out because they were so good for the investor.
Yes.
But does gold and silver continue to attract you?
Yeah, so Lata, I've been very positive on gold, silver for a long time now. I think it's done very well. It's up 50%, almost 60% this year.
My fear is mean reversal over there.
Silver's up almost 100%. In my view, both gold, at least gold will surely give, my broad view is it should give about 8 to 10% normalized return in rupees, because 3.5% currency depreciation, gold should do about 7-8%. You'll get somewhere in the range of 10-11% over a period. Obviously, if it's given 60%, it's highly possible that, there is some mean reversion and gold corrects. But my broad view is it's an asset allocation call. You should at least have 10% in gold stroke silver. Easier way to play either is the ETF, or you can look at, the miners. Miners is a good option. There are a lot of mutual funds which invest in feeder funds of mining companies.
Okay.
So the thing in mining companies is the miners are not being priced at gold, which is the current price, which is say 3,000, 4,000, whatever is the exact dollar, or $60 for silver. They are not priced at that, priced at much lower. So there is an upside there. But there are no plays in India. So these are feeder funds overseas. But I am still positive on both.
Okay, as expected, I'm being warned that we've overshot. But just a word, how crucial is this trade deal with the US? If that happens, do stars turn entirely for us? Or is it not that material? We have learned to live with it.
So I think it is material. It makes a difference. We cannot antagonize US, which is one of the largest economy. But it looks like India is learning to live without the trade deal. It doesn't look like India is in a hurry to sign. The fact that, the Russian premier is in India and India is talking...
You're wearing it on us.
Yeah. So it looks like India has decided, or some sort of agreement that we have to live with this. Few sectors get affected. A lot of the other sectors have got exemptions. So I think it isn't a big deal now. It does make a difference, but I think India is learning to live without the trade deal. That's my view, that looking at what is happening in Delhi, it looks like that could be one of the reasons.
Okay, but let's see. There is also a team here to negotiate. Yes. So for all you know, we may get some good news. Yes. Hoping it in 2025 now looks a little difficult, but maybe FY26. Well, we have to wind up on this excellent edition of Market Masters. Thank you very much for joining us, Shivram. Take a break. Thereafter, Chartbusters.
"26 years of CNBC-TV18.
Presented by Punjab National Bank, the name you can bank upon. Co-powered by SBI, best hai sabko pata hai. In association with Servo Hypersport F5, when speed is your default.
वरुण आना
वरुण कहाँ?
तीसरा महीना
Bro, चलना
छुट्टी पे तो चिल कर।
चिल मेरा बैंक मुझे चिल करने देता है। पैसे डालो फॉर्म भरो, पैसे निकालो फॉर्म भरो, और सुन सेविंग्स अकाउंट में इंटरेस्ट पता है कितना देता है? इतू सा, और वो भी यार 3 महीने बाद।
नॉट बैंकिंग विद AU?
AU? AU?
AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने।
मतलब मनी 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 एवरी मंथ।
ब्रो, सोच बदलो और बैंक भी।
चल आजा।
आगे।
इतने में क्या ही मिलेगा यार। सोना तू ठीक तो है ना? अरे गोल्ड ETF, all you need is 200 rupees or less.
Gold ETF. It's Aaj Ka Gold, regulated and backed by Real Gold. All you need is a Demat account.
Nephrocare Health Services Limited, India's and Asia's largest dialysis services provider, offering comprehensive dialysis care through a network of clinics, from diagnosis to treatment and wellness programs. now makes an initial public offering of equity shares of face value of 2 rupees each for cash at a premium. The 100% book-built offer, being offered in a price band of 438 to 460 rupees per equity share, opens December 10th, 2025 and closes December 12th, 2025. For risk factors and details, refer to the red herring prospectus.
अब बस बेटी की शादी हो जाए, सारी जिम्मेदारियां खत्म। इसलिए मैंने ली है VIPshadi.com की मेंबरशिप। इनके टॉप रेटेड कंसल्टेंट्स ढूंढते हैं सबसे अच्छी प्रोफाइल्स। रजिस्टर नाउ।
I am really motivated to grow my career, learn new skills and prove myself.
अगले हफ्ते जॉब इंटरव्यू है, इंग्लिश में प्रैक्टिस करें?
Sure, let's try some.
I want good career, new skills, खुद को प्रूव करना है।
Great, you can try. I'm really motivated to grow my career, learn new skills and prove myself. और हाँ, तुम ये भी बता सकती हो कि इस इंडस्ट्री और इस कंपनी को लेकर तुम क्यों।
तेरा ये बिजनेस एक मास्टर स्ट्रोक है।